morning, traders. Welcome to the TMT stock market strategy video for Wednesday, February 24th. Well, we got a little bit of a push lower. We started selling off due to Saudi comments. The minister stating that he believes that there will be no cuts, and that rattled the energy markets as well as the U.S. equities, and we sold off. We are now following suit. We're down about 136 Dow points this morning, 15 ES in the electronic Globex session. So where do we go from here? Well, I mentioned many times that I do treat this little rally, if you will, suspect, meaning that I don't believe the rally is anything other than a short covering rally, and I am looking for lower prices. I do believe that, and until we get into a key pivotal area on the weekly charts, well, I'll show them to you as we get closer. I'm expecting some new lows and lower lows, actually, from where we are. One of the reasons why is gold, GLD. You could see that gold coming off a weekly chart. We had a beautiful bullish falling wedge. We went into a sideways consolidation and we exploded higher, and that came right on the date of the new year. And as you know, what happened in January, we sold off very hard in pretty much most of February. And now we're just we've rallied in the equity markets, but still holding true here, okay? This is telling me that there's still fear in the marketplace. We still have utilities, consumer staples moving higher. Yes, the VIX did move a little bit lower, but I do suspect the VIX to start creeping up and start going higher yet again. And I'm looking for that 37 to 40 print, which I do think the markets then will, and only then, will probably stabilize and will look for higher prices, at least a trend change. And I mentioned many times about the seasonal build in inventories in crude oil, which comes around March and April. And I do believe at that time we could possibly see some sort of a tradable low in the markets and then move from here. Now, March and April are the two back-to-back strongest months in equities of the year. So we're approaching that. So at one point in time, I would suspect that we move lower and then stabilize. But again, that's still a little bit, 4 or 6 weeks maybe. So let's see what happens. Let's keep it really more of a short term. All right, so there's GLD. Take a look at Spiders Daily, and you can see here we have this double top basically formed into this area of resistance of 193.50, and we're right underneath the 50-day moving average again. So this, to me, is nothing more than a short covering rally. And you could see here, believe me, guys, I know there's less volume because of the dark pools, and for those of you who are interested, you should come in and take a look, stop by. We have a dark pool trading room with futures. And for those of you who are interested, drop an email to support. We'll give you a free login to come in. It's highly, highly profitable. It's a great trading system, very accurate as well. And they're showing you where the money flow is, where's it going. And you can see here, based on this little movement here, that we have lesser volume on the way up and increased volume on the way down. So that's not really good, and I don't believe this market is really going to challenge the highs. And I keep mentioning as well on these videos that we have a lot of players that are trapped up in here. So this 1950 in the ES, 2000, 195 to 200 in the Spiders, and these a lot of players that are still looking to get out of their positions. And if this market starts to sell off pretty hard, you're going to get the guys that are long up here start just hitting bids, and this is just going to go. And I'm telling you, be prepared. No one knows if it's going to happen like that, but if it does, as you know, with the Dodd-Frank Act, we have lesser liquidity out there because of the Dodd-Frank Act, and you just got to be very careful, okay? Very, very careful here. 60-minute chart, you can see we have a big area, big band of resistance. We broke back above it, and I mentioned yesterday that we really didn't go anywhere. We gapped up, and that was it. And that's what I really didn't like about equities. And look what happened here. Now we had to fill the gap, and we did so. And we have plenty of gaps to be filled, guys. Now, this gap areas are also going to be areas of support, right? So you got to look for these areas here, that these areas are going to be support, okay? So watch it and see what happens. And, you might want to mark that down 190, 188 to 186, and then 182 to 184. These are your gap areas that I look for any type of move into that and a bounce, or a move into that and a bounce. And if that does bounce into this area, this gap area that's what's filled and start to move over, that's going to be also a good area to short, okay? So I just figured I'd let you guys know those areas, the value areas. The transports weekly, we have a big head and shoulders pattern. We hit 118. 108.50 is likely, and this is where I'm thinking that we're going to probably end up. We did have a bear flag, which we broke back out of it, and we barely are sitting right on the 200-week moving average as well as the 20. So, again, this is not a good sign, not a good sign at all that the leader has a big bearish pattern which triggered to the downside, okay? Take a look at the daily chart. And the daily chart looks a little bit better, right, because we're in an uptrend channel. But we're still way away from the daily 200. And again, once we approach these levels, you could see here, and I'll just put a horizontal line that we're approaching big area of supply right up into this area here. Okay, so even if we do get up there, I suspect that this would probably be the length of the move, and then we start to revert back down again. All right. IWM daily Russell 2000, as you can see, support at 97.50 remains. We still have the 20-day moving average coming in at 164, just underneath that 8, and we're well below, way below, excuse me, the 50-day moving average. So, and we're starting to revert back down again. So you can see here, guys, that we have, again, repetitive pattern, double top, and I just think that the market looks to go lower. And you got to be careful here. I would not be looking to add to any longs at the moment. I do think that the markets are not done going down. And I just want you guys to be aware of that. That's all. Just follow your trading plan. We got support, now going to be resistance on the diamonds. We broke back down below the 50-day moving average. Well, yes, we are above the 20. But watch, guys, here is really important here, okay? This is where if we start to revert back down again, I think this time could be a little faster as far as risk off and where people start selling, because now they don't believe that we're getting back up to these areas where people are long. They're going to start hitting bids and say, you know what, I'm not waiting down here. I'm going to start getting out of my position. So just be aware of that, okay? Lastly is the Qs. And again, technology and banks, not good. They're not participating in any of this rally. That's why this rally is suspect, and that's why this rally is just a short covering rally. It's going to be a great opportunity. We're looking for some short trades here. So just remember, this resistance of 102.70 remains and still is holding true. It's capping this rally in technology. All right, so just be careful here. I'd be watching the Qs. Watch some of the bigger bellwethers in the Qs, the top 10, and that'll give you some good signs of what's going on here, okay? Hope it helps everybody. Have a great day. Use your stops. Definitely follow your trading plan. Have a great day, everyone.